G'day folks, welcome back to another update on the 1st of August 2024. This is the world markets update, and as you can tell by the title there, the markets have taken a bounce off various bullish divergence that have happened. Before we go any further, make sure you hit that like and subscribe button to get notifications, and also support us more on the Patreon page where we look at weekly bullish shares. Now, going to the heat map, you can see there on the bottom left, this is what we're covering today: the US, the German, the Japanese, and the NASDAQ. And predominantly they're bullish still on the monthly trend, and on the weekly they're turning bearish and neutral to bearish, and one bullish on the daily time frame, and plus some of the other instruments for your reference should you be trading those. So look at the S&P 500 first. On the monthly, we're still bullish. We're still above the moving averages of our CCI 150. Although notice a very long term, we've got a bearish divergence, lower highs on the CCI versus higher highs on the price. Now we're still getting a relentless rise in the stock markets across the world, including the S&P obviously. So just be mindful of that. We might see a bit of a drop in the coming weeks or months even. Now on the weekly, that's also showing a bearish divergence versus higher highs in the price. And these divergences, by the way, are independent from each other. But you notice on the CCI, it's actually broken below the moving average range. So that's a bearish signal. On the daily, again, another bearish divergence, almost a double top on the CCI versus higher highs in the price. And that's also showing a bearish break to the downside, but it's actually broken up into that moving average range, giving us a neutral signal at the moment. Now I've drawn these rectangles. You can see there, that was the first divergence played out there. It dropped down and hit our target area. And the second one is also still in play, hasn't reached it in terms of the target area, and that goes from the Fibonacci low between that point and that point. So if I draw it for those new to the channel, that first one, you can see there, the first one's the 23-38% target range, and this second one now, we're targeting that 23-38% level. So again, we'll keep an eye on that and see which direction it goes if it does hit that target in the short term. Now going to the hourly of the S&P, you can have got the daily here as a reference. You would have taken short trades from that point on the 18th of July, which happens to be around this area, and I've drawn these red and blue arrows indicating going long or short. We only go short during this period, so you would have gone short during those little trades there and closed them out when the CCI breaks into the moving average range, or if the price breaks into that moving average range. It's probably worth following very closely and making sure you get out optimum levels. Now in this case, that would have been another short trade to take. A couple of these would have been false breaks or small losses possibly if you had stop losses. And this one would have been a nice little trade to take, and you would have taken heed of these little bullish divergence. You can see that little bullish divergence broke up and hit that 23-38% level between that Fibonacci range. That went a bit higher, probably around close to the 50% level. And this second bullish divergence broke up in that 23-38% level. Now in this case, we also had another continuation of that bullish movement, and we're making new highs at the moment. Now we don't take long trades yet, but we want to not break it. Take long trades once this breaks above the moving average range on the daily chart. You can start taking it now, but you're taking a bit of a risk because this could always just break to the downside, and it does that quite a few times as well. So again, we'll keep an eye out on the intraday time frame. The GermanDax, that's still showing a bullish momentum above the moving average of the monthly. And that's similar to the S&P. That's also showing a bearish divergence, very long term, over a number of years, you can see there, versus higher highs on the price. Now we haven't drawn a target area for that yet because that's still rising, but just be mindful of that. Now also notice as well, we might see a bit of a retrace to the downside. You'll notice the CCI is pulling back towards that moving average on the monthly. On the weekly, similarly, we've got a long-term bearish divergence versus higher highs on the price, and that's already broken below the moving average range. So just be mindful of that. Only take short trades if you're trading on the daily. Take short trades only. On the daily, again, we did have a bearish divergence here. A couple of them actually. The first one hit its target. You can see that candle there that wick broke into that range, then bounced. And then the second one, we had a small divergence there that hit the target there. Then this one fell further, and we've got a second target hit as well. Now this one's moving sideways at the moment. So again, going short only if you're trading on the daily, based on the weekly. And if we go to the intraday or the hourly chart, you can see there it's pretty much bouncing up and down through that moving average range. So just be careful about going long or short. But at the moment, if this continues to the upside, you take long trades only. and that starts from this point here. So just be mindful of that. I'd like to see it break, for example, on these moving averages. I'd like to see the moving averages widen like they were here, or they were here. It gives us a lot greater range of price movement. At the moment, it's very condensed, very consolidated, and you can tell by the price movement, but also by the CCI as well. Next, we look at the Japanese Nikkei. Now, this was bullish for some time on the monthly. There was no divergence to talk of. There was a little divergence back here. That played out, but then it rose, and the CCI then started rising in line with the price, so there's no divergence there. On the monthly, though, the CCI is broken into that moving average range, so neutral positioning if you're trading on the weekly. And on the weekly chart, we do have a bearish divergence here versus higher highs in the price, and I've drawn a target area, 23-38% level there. Hasn't reached it yet, but it's still dropping, and it may well reach it in the coming days or even weeks. So again, short trades only if you're trading on the daily. Here we've got another bearish divergence versus higher highs on the price. It had a couple of them actually. This one first hit its target and bounced. I've got another one playing out at the moment. That's also hit its target and possibly bouncing, but notice it's actually bouncing lower. So that is a fresh breakout to the downside and bearish trades only. If we go to the hourly chart, bearish trades only in accordance with the daily chart here. So only take short trades from the 17th of July, which was this area. So only take short trades, but notice we had a couple of bullish divergence as well. That one just missed its target. So that was a failed one, and they do fail occasionally, but maybe less than 10% of the time. 90% of the time the divergence do work. We had another drop, and again only going short. That would have been a nice little trade to take going short there. That started going long, and a couple of false breaks to the downside. Now you'd still be in a trade now with a fresh breakout to the downside of the Nikkei, with a fresh break to the downside there in accordance with the daily bearish outlook. And lastly, we look at the NASDAQ. Now the NASDAQ showing a very long-term bearish divergence as opposed to higher highs on the price. And I've drawn a target area for that. Hasn't really started to come back yet. We'll keep an eye on that, obviously. On the weekly, another bearish divergence versus the price. That hit one there previously, and there's another one that hasn't started to decline yet, so we've got that price target in there. And on the daily, we've got a break to the downside. That, by the way, is a bearish momentum on the weekly. On the daily, it's also bearish, and that's broken below the moving average, but it's also broken up into that moving average range. So neutral at the moment on the intraday. So if you go to the 1 hour chart, we don't take any long or short trades until we see the daily confirm and break above or below this moving average range. At the moment, the price is moving higher. Again, you could have taken a premature entry there, but you're sort of a bit of a gamble because this could always collapse and break suddenly to the downside. I'd like to wait to see it break to the downside like it did there, and you would have taken short trades from the 12th of July, which was back here. You would have taken all these little short trades. So hopefully you got something out of that video. Hit that like and subscribe button. Support us more on the Patreon page where we look at bullish shares. Thanks for watching, and see you in the next video.